welcome to Farm Your Daily, a field forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, China has promised to buy U.S. soybeans, millions of tons of them. We speak to Grant Kimberley with the Iowa Soybean Association about what that means for Iowa and how producers still want to work on diversifying the customer base. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Your Daily. And there was some big news around the country for soybean producers today with some notice from President Trump and his conversation with President of China, Xi Jinping. And to talk about that, we have with us from the Iowa Soybean Association, Grant Kimberley. Grant, thank you so much for joining us on Farm Your Daily today. And let's talk about that decision. There are supposedly a lot of soybeans that are going to be bought by China now. What's the details that we know?
Yeah, thanks, David, for having me. This is a very positive development. We heard that there was a good meeting between President Trump and Chinese President Xi, and they committed to resume more normal trade relationship, extend the trade truce in a sense, and make some purchases, including things like soybeans, and hopefully there's some other commodities as well. And so we're still trying to dig into all those details, but what's been reported is that the Chinese have committed to purchase about 12 million metric tons of soybeans this year, I think up to a minimum of about or a baseline of about 25 million metric tons per year in each of the following years for the next 3 years. And so that's kind of what we know. Now, I do want to say, while this is all very, very positive, and we were at virtually zero going into this week, so we wanted to see this happen, and this is a big first step. But we want to keep this in perspective. This still is not getting us back to where we were pre-trade war. So 12 million metric tons is less than half of what we would normally see shipped. And actually, we in non-trade war years, we probably have been shipping anywhere from the upper 20s to mid 30 million metric tons of soybeans to China per year. So that's the ultimate goal. We want to get back up to those levels.
I think that's a good perspective to make. It's a good chunk of our soybeans that went to China originally, and putting it into that perspective is key. About a quarter right now, this amount here would be maybe 12 to 13%, something like that, and then jump up to a quarter of beans heading over there in some capacity. Is that correct?
Yeah, I suppose that would be a little less than a quarter, maybe 20%. If they hit the minimum targets. If they go above that, then yeah, it would be better. And we'll have to wait and see. And of course, we have been working really hard, and maybe we'll talk about this more later, to diversify our market since the first trade war. We've been gaining market share in other parts of the world, but again, China is 60% of the world's global export market for soybeans. So you still have to have a big share of their market.
I appreciate you bringing that up because I definitely do want to touch on diversification. But before we get there, I want to talk a little bit more about this deal. We know
Yep.
President Trump said he was going to talk to the president of China and have a conversation, cut a deal over there. And this seems to be one of the outcomes. Has there been any more discussion on logistics? I think you said there's still a lot of uncertainties. Is pretty much all we know these numbers that are promised?
Yeah, I think officially that's really all we know. Of course, with the government shutdown, we don't get as much of we would normally get more export data on a weekly basis. So we don't know. There could be some more sales happening that we just don't know about. I guess you could say is a little like the Russian grain robbery of the 70s could be occurring, but we do have a lot more information these days, of course, and there's talk in the trade, and you're gonna find things out eventually. But before this week, what we did know before this week, we had sold China zero soybeans, and that's never happened before, even in the last trade war up to this point in time. Now we've seen a few small sales here this week, and hopefully there's going to be a whole lot more. There's going to have to be a whole lot more here in the near future if they are to achieve some of the commitments that they made to President Trump here just recently. So we'll have to wait and see. But as I've always said, we have missed half of our marketing window already.
Mm-hmm.
Usually our export marketing window for North America runs from September through of January, February, and then South America starts harvesting and they take over as the primary world supplier. And we still export some after that, but not as the primary supplier. And so it's very difficult to see large quantities happening after that point. So China has to get on their horse here, figuratively speaking, and start making a whole lot of big purchases in a short period of time because the window is going to close here pretty quick. And that's probably why they didn't commit to getting all the way back to a normal level. They committed to get back to something that was a little bit less than half of normal here in the short term.
I think that that is a good point because logistically speaking, are we able to send that many soybeans right now, considering we are already halfway through the new crop buying season, if you will, for this harvest? Are we able to send that many soybeans over the next couple months with November being just a couple days away?
That's a good question and something will dig into a little bit further. I think we can, especially if we have until February to do that in. If, as a couple people have said, well, if they have to do this all between the now and the end of the calendar year, then I don't think so. But if they have until January, February, then yeah, maybe and probably yeah, they could probably do that volumes. Of course they could
Right.
because if they can buy 30 million metric tons in a more normal marketing year, give or take, I think they can do 12 in 3 to 4 months, definitely. But if it's only a month or two, then that's going to be more of a challenge. And as I've said too before, you just don't Uber a Panamex vessel and have it sitting at the port
Yeah.
tomorrow.
Yeah.
Uh, there's a lead time to get these logistics lined up. You've got to get the beans in position from the farm to the elevator to the river terminal or the rail terminal down to the ports and then loaded on these vessels. And you've got to get all that in place. And usually there's a lot of times I hear people talk in terms of a 45-day lead time on some of that kind of stuff. So maybe a little shorter if you expedite and you want to pay up, probably logistically. But that's going to be the challenge in now getting this all done in a normal period of time. Now, China could also choose to pay more over the value of the market for a little longer period of time and maybe buy longer into the winter season
Right.
and that's possible too. So we just don't know. There's a lot of details we don't know, and we have to see follow through now. We've got some good positive news, but we have to see follow through next.
Right. And I think we all know that agriculture is logistics when it comes down to it, especially in global markets. And
Yes.
the US has really perfected that craft in getting our products all around the world. So I wanted to ask
And
those
keep in
questions
mind,
because,
we're hopefully still selling some
yeah.
corn and sorghum and wheat and everything else. So we can't just see that stop either.
Yeah, you can't
So
just pause all that other stuff and say, well, now we got to send all the soybeans. So
yeah,
I didn't want to like have a situation where it's like China goes, well, we promised that to buy all this and we were 100% willing, but they weren't able to deliver all the stuff that we wanted. So sorry, I mean, that's on you guys, really. I don't want that to happen.
yeah. I mean, it's hard to know, but that's something that I hope the administration stays on top of, and they work with the Chinese to enforce this and uh, do it as has been advertised, and then go above and beyond that eventually as well. But again, as I've said, this is great first news or great first step, great good news. But now we have to see follow through and see where it actually ends up. And this doesn't get farmers out of the woods. Farmers have been losing money for the most part since 2023 for lots of reasons. We have this stubbornly crazy high inflation, input cost price squeeze, lower commodity prices relative to what they were before then. And then you've got uncertainty in the biofuel policies domestically. All those factors have created this perfect, terrible storm for farmers over the last several years. And so today might be a good first step to hopefully start to move us in the right direction, but we got a long ways to go.
Let's talk a little bit about diversification because that's kind of what hit us hard this year as well. Because China went and diversified their portfolio of where they were able to buy from
In
the last trade
2018 and
war. Yeah,
2019.
yeah,
Yeah.
yeah. And
Yeah.
so I have heard
They helped
questions.
Brazil close the gap,
Yeah,
logistic advantage that we used to have over
yep,
them.
them and Argentina. And I think of that, and I think of questions that I've heard from folks as well on why didn't soybeans do the same thing. And I think you answered that partly. Obviously, China buys 60% of the world's supply of soybeans. That would be that'd be a big factor. But I know you guys have been working very hard on finding new products and new ways to use soybeans and produce that. Could you address some of those and some of those concerns as well?
Yeah, from the export side of things, we've been diversifying. We've always been diversifying our markets for 40 years. We, as the soy industry, through the U.S. Soybean Export Council, have consultants and employees and offices representing U.S. soybean farmers and U.S. soy exports around the world in over 90 countries. We are working in over 90 countries around the world to do this. And so we've continued to do that for many years. And then also, since the last trade war, we have put additional resources and efforts into that. And then again here more recently again. And we have had success. We've seen additional market share in new place in places like Egypt and Colombia and some countries in Southeast Asia, Bangladesh as another one. And so all those things we continue to work on. Mexico still a good solid buyer, one of our top buyers, for beans and meal. The EU is one of our top buyers of beans as well. Japan, we're continuing to work there, and we have room to grow that. Some of those areas, though, we do already have pretty good market share, and others we can get better, and we're working on that. But some of that's a logistics, difference between North and South America that it's a difficult thing to sometimes overcome. But we're working through that and building that preference for the sustainability, the quality, the reliability, differentiation that U.S. soy does provide over South America, and we highlight those factors to the buyers around the world. And there are several buyers that understand that and see that difference. Some, don't, and some are purely price driven, but others see the quality difference. And so we're having some success, but it's again like it takes a lot more singles in a baseball game to score runs versus if you can hit a couple home runs and triples. So you just you have to add all those things up and keep working away and chipping away. And that's what we'll continue to do. And that's the export side. Now on the domestic side, we've got the biggest demand driver potential that we have is for our biofuel programs to continue to move forward in the biofuel marketplace, related ethanol on the corn side and biodiesel, renewable diesel on the soybean side. And in the livestock industry, of course, that's the foundation of our demand is livestock feed demand. But I'm just talking about areas we can continue to grow it even faster. Livestock feed demand growth is more stable, maybe slight increase. But if you want to see bigger domestic demand growth, then the fastest way we could do that is to see the finalization of the RFS renewable volume obligation targets for the next couple of years that EPA was supposed to be delivering and done with tomorrow, this month. That won't happen. It'll get delayed, and that's unfortunate. And then the finalization of the rules for the 45Z tax credit, that also is important to drive that market ahead, and that then drives demand for our soy and corn and everything else. So that's the other areas we got to continue to work. And then there's other things like bio-based products, new uses like soy-based firefighter foam that you use to put out fires, and that is something that replaces harmful cancer-causing chemicals that are found in other firefighter foams. So and you've
I think
got
of asphalt, the new
asphalt.
asphalt products,
Asphalt's
and
another
there's an
big one. These are
awful
all
lot of roads that need to be repaved, and
yeah.
why not use soybeans?
All these projects, all these new uses have been researched and developed by the soybean checkoff, and then taken and commercialized in some cases in various levels from the commercial sector to move it forward. Again, all these things by themselves aren't enough, but when you look at it in totality, they can add up and help and make a difference. And that's what we're going to continue to do and work forward. That's our mission and our goal.
Grant, before I let you go, I did want to touch base on kind of the home front, get a little bit closer home, lighten up the conversation a little bit. I know it's kind of good news today, but just talk about the farm and how you guys are doing. We don't have those USDA reports, so the only way I can learn about what's going on the farm is talking to people.
Yeah.
How was the season? How's the harvest? Are you guys wrapped up yet?
We're not quite wrapped up. We're getting close with corn. Hopefully, we'll get the corn wrapped up here in the next, within the next week for sure.
Good, good.
And, hopefully that's the case. And I think the weather forecast looks pretty good. We got some good rain earlier this week. And so we're kind of letting things dry out a little bit and then hopefully get back at it here maybe tomorrow or this weekend, and then get things wrapped up later in the week. On the corn side, beans, we've been wrapped up for several weeks, but
Right.
overall, things have done pretty well. I would say our bean yields were overall pretty good this year, similar, I guess, in a way to last year, which were also pretty good. Corn yields have been good, but down from where they have been the last several years. So definitely there was a major impact by southern rust, and
Really?
that had a major impact on corn yields this year. And even if you sprayed fungicide, it still had a major impact. Now, if you sprayed fungicide twice, it may have worked out a little bit better, but we just don't do that very often here in the Midwest. And it's hard to spend extra money when you're not making money, and you haven't made money really since before
Right.
2023. So that's the challenge with it. But we'll see. We learned a lot about different hybrids, handled it better than others. Planting dates made a difference in some cases. Sometimes later planting dates were better for corn, and so we'll just have to see. And soybeans, we just have to continue to look at a variety of differences and our management practices and continue to do the best we can there. Overall, I would say, we had a pretty good yield despite everything. But, if I, had to take a look at it, that USDA corn number is coming down. I don't know how much exactly, but it's coming down. The bean number might hang in there, be close to what they had been saying. We'll see. And, you talk to farmers and our colleagues around the country, and you hear it's all over the board, so it's hard to put your exact finger on it. Everywhere is a little bit different. Some places are saying it's the best thing they've ever had, and other places say, well, it was really bad, so, and everything in between. So we'll have to wait and see where that all ends up. But I do think USDA is going to be bringing that corn number down some, but we'll have to see how much. And I think the big question is, will it be lower than last year?
Right.
We'll see. When we have record corn acres plus some other disease problems, it's really hard to beat your last record yield, I would think. But we'll have to see. Beans, look, I think beans are going to hang in there pretty good mostly. But, I heard some pockets of people had a dry August, though, in some pockets of the country. And so that was impacted for their bean yields. So it just depends.
I bet there's going to be a lot of farmers who are huddling around the game tape and checking out all that data and all the yield prospects and hybrids, as you were talking about, after everything's kind of settled here in a couple weeks. So it'll be interesting to see as we walk what those conversations will be looking like.
And now the hard conversation, too, is looking at your fertilizer program for next year and the costs and everything else has just been stubbornly high. Machinery is crazy expensive, and fertilizer's been high, and seed costs have been high, and chemicals have been high, and it's just a really challenging time here. And we're not out of the woods. We haven't dug out of this hole yet. Land prices are really stubbornly high, and so I think farmers are going to be looking at how to manage their costs here still going forward here this next year. And hopeful that that kind of moderates and gets more reasonable here in the future. Things like Senator Grassley and Senator Ernst's Fertilizer Study Act bill and others who are signed on to that'll be a good thing to see move forward. It doesn't solve everything immediately, but maybe we can learn more on how we can get a better price structure for fertilizer, getting rid of some of the countervailing duties and anti-dumping duties that were placed on phosphates several years ago in the last administration. That needs to go away. That would help with phosphate prices. And then you have some additional tariffs that are impacting us on the input side today too. So not one of those things is the only cause of this, of the challenges we face, and just inflation in general is a factor. So there's lots of things that are factors and lots of things that are causing to the stress that farmers have had to endure here the last couple of years, but hopefully we can get a little bit better handle on it and see some brighter days here in the near future.
Grant Kimberley is with the Iowa Soybean Association. Grant, thank you so much for taking the time to join me on Farm Here Daily.
Thank you. We'll keep plugging away and trying to create more demand. Thanks.
This is Farm Here Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast and check out our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again tomorrow, everybody.